gaps that I want you to really pay close attention to is why are these gaps important? Why do we draw them, right? So you've identified them, which is fantastic. But let's go over just real quick why it's important to look at these gaps. For example, here on November 10th, we had this big gap, right? And for a few days, for about a month, nothing happened. And then all of a sudden, we come back to that zone, we close it 50%, we play around that zone, and then we close it 100%. So as I said, as soon as it's closed 50% for all practical purposes, this gap is closed. However, they still wanted to keep going all the way down, right? So we don't know when institutions want to close it just halfway or fully. We just let it play out. So I left this here because we talked about it a couple of weeks ago when we went on break, and I wanted you to see that. But the other interesting things to look at is when you have gaps, when you identify a gap, and that's why it's good to draw the gap as soon as you see it, right? For an exercise purpose, you are doing it hindsight, but as soon as you see it, like between the 15th and the 16th, you see the gap, you draw it. You don't know what's going to happen, right? So the next few days, it almost closed that gap. So we say, okay, we close that gap, so I don't need to see this anymore. But one that's very important for this conversation is, we say gaps will act as support and resistance. Look at this gap that was left, right before Christmas, right? That Thursday before Christmas. And then it kind of touched it, it closed it halfway, right? And then today we went above it. But what we did today was close it completely. Remember when we looked at the one from way back here? They closed it 50% and then they closed it all the way. They did the same here. They kind of played around, closed it 50%, and then they closed it all the way. And today, when price touches that and reverses, you're not surprised because you know these things act as resistance a lot of times, resistance or support, depending on which side you come from. So even though we had come to 50%, but they decided to do it one more time, as soon as price opened within that zone, it went up and it got. This is a heavy rejection. This on this one bar alone, if you were to trade on a big wick, and even though it's not a hammer, I want to trade it. You could trade it, right? That's not. I'm not suggesting we trade that, but this is another indication that price has really decided to not allow the bulls to take over. As the bulls opened high, they pushed price higher, but once the gap was closed, the bears came back and said, no, we're not going to let you do that. So that's why we draw these gaps continuously. This gap down here, it was closed. This gap here, it was closed. Right? And we're seeing a lot of gaps lately. We see a lot of gaps. This gap here, not yet closed. Right? This gap here, not yet closed. I should draw this gap, but what I am concerned with is we have. I leave some of these drawings for, your benefit, but this area here, this area here is a supply zone, and because we are in this supply zone, before we close the gap, this supply zone is going to act as some form of resistance. And then once we're done with this resistance, I can come back and take a look at this gap. And sometimes, even when like in the SPY, I have so many drawings. some of it I'll just say, okay, I know I have this gap, I'll just pay attention to it without drawing it. But if we spend a few months now, then not drawing it would become painful, because when I don't have this gap visible, right? Like a few months down the road, and we get resistance there, I might be wondering why is price rejecting it, right? There's always a reason why it's rejecting there. It's a good idea to draw it. So with that, let's go back to what I said in terms of how do you identify supply zone demand. So what you're looking for example, for a demand zone, price rises, it falls, it forms a higher low, and it rises again. This area becomes your demand zone, because whoever wants to shoot price up, they're not going to chase. What they're doing is they get some of their orders fulfilled, they want to come back and collect some more. And that's the purpose why we have that demand zone. And we don't know when they're going to collect, so we just identify it. And then in that same sense, this area also becomes your demand zone. So in this area, when price comes back down the next time, because we have identified, we know what to do. Now, in the same way, if this was like this, in the same way, this upper area becomes your supply zone. This upper area becomes your supply zone. It's the same thing, right? It's when price rises and drops, that peak area or the bottom of that valley, that's where your supply and demand is. It's really that simple. That's really how you should look at it. And so the way you identify supply is rise, then drop. That's one. Or it's rise, consolidate, drop. That's your second one. So it's this area. It's this area or this area. When it's consolidating, it's a much wider area. When it's just rising and falling, it's just easier to identify. It's not about which one bar sticks out and I choose that one bar. No, because if it's multiple bars, then it's consolidation. Because what could happen is the same way. You have rise, you have consolidate, and then drop. That's also an acceptable area for your supply zone. So you have these three conditions: rise, drop, drop, consolidate, drop, rise, consolidate, drop. You identify those areas. So now for the demand zone, it's just the opposite. Could be drop, consolidate, rise. It could be drop, rise, consolidate, rise some more. So rise, consolidate, rise, you get that. Drop, rise, you get that. Drop, consolidate, rise, you get that. So you have 3 to the upside, 3 to the downside conditions that are met to create supply zone and demand zone. So it's not about finding a specific one bar that tells you the whole story. It's a
quick question on these, Beanie. On the one you just drew, on that one, is it so the way you determine it's either because on the consolidation one, because it's hard to determine if it's a supply or demand. So do you just wait until that last move to then determine, oh, this was a demand zone, right? Because then because you don't really know when it's consolidating if it's going to be either a supply or demand, right? Is that kind of how you do that?
So supply zone and demand zone are identified after the movement has occurred.
Okay, that's what I thought.
You don't identify it as it is occurring, right? So if you look at here, when you have this consolidation here, you don't know what's happening, right? So you don't identify anything. You have identified it here, which was touched, and it comes again. However, this part you don't know, because you don't know this part, you wait. And then when you see this rise, then what you have is a drop, a consolidate, a rise. Then now you know this is a demand zone.
Yeah, makes sense.
Yeah, so you have to wait.
Yeah.
For these conditions to be met. Right? If you want to take a screenshot, I'll pause for just a second, but it will also be in the video I think that I'm recording.
Yeah, no, this is super helpful. I just wanted to confirm because that's what I understood too, but I wanted to make sure I didn't miss anything else.
Yeah, that's an important ingredient, right? Is being able to wait for it to happen, and then you identify it because the purpose why we're identifying supply zone and demand zone is not to take a trade on the spot, is to know when price does something, when price does something in the future, what is my next action? Like, is there an area of strong support, which is the demand zone, or is it an area of strong resistance, which is a supply zone that I can identify? And once I've identified those areas, then when price comes there, I know what to do. And what I mean by I know what to do is if I get a trigger to go long, right, and I'm going up in this direction, do I wait until I have my fib targets, or do I take something off when I hit this? Because a lot of times price gets rejected once it gets there. Yes, it's possible that it could blow through it. This is always possible. But if it's happening over multiple bars, right? If this is multiple bars before it crosses over, I'm taking some profits here. I'm not taking any chances. Because this could be this, right? This could be this. So I don't know. So because I don't know, I'm gonna protect my profit. Or if I see an inverse hammer right here, I would say I'm gonna enter a position. If it, collaborates with other things that I'm looking at, like a fibs and stuff like that. So that's why it's important to look at these parts, right? It's important to look at these parts.
Mm.
So it's that combination. So when you're looking at SPY, like I have a lot drawn already. I have some drawn here, here, here. So I'm waiting. What would price do when we get down to this zone? I think I drew this on the weekly. Like when we come back down here, we're not very far from this area right now. So will this be the area where SPY gets some strong support and we go back up? Or is this a weak area and there's no demand? Institutions have removed all their buy orders. They're going to let it slice through. When we come back up here, when we come back here, when we come back here, do we get resistance and come back down? Right now, I am biased to the downside, even though my monthly, weekly chart are saying, hey, we haven't broken the 78.6. Even though they're saying that, I'm still biased to the downside. Here's the pre-COVID high that I have marked, and I'm waiting for that to take place, and we could go even lower. So because I am short-term biased to the downside, I'm just going to keep watch of all of these areas. So it's important, really, really critical to keep identifying your supply zone and demand zone. Right? So any specific ticker we can look at? Anything you have in mind?
Yeah, I would love to look at also, where do you draw them from? I think we've done it one more last time, but I just want to confirm with the way you draw them in the actual chart. I think you said it's from if it's a supply zone, it's from the open of that to the high, and then reverse for the demand zone.
So here, let's just take one here. So here we have rise, almost consolidate, and then drop. So if I use this area as my supply zone, I would look at this open where we have this big push and then where it starts to consolidate. I go from that open to the high. This is how I would draw it. And then to the downside, I would look at an open to a low, right? Oh, like I would use this wick if it's not a consolidation. If it's consolidation, like you see here, I take the whole series of bars of that consolidation zone because it could be anywhere. Again, as you can see, price, if you draw this as demand zone, when price comes back down to that zone, it acted as support. Price went back up. It came back down. It went back up. By the way, in my trading style, once it touches once, I remove it completely. I don't consider it again for another entry. You'll say you'll miss a few trades. That's fine. Because once the order has been filled one time, I don't count on it being filled the second time. Especially when it's been coming down like this, strong push to the downside, and this acts as support, and it does not make a new high. It makes a lower high, and it wants to touch it again. I'm more comfortable not participating in this trade, missing out on this opportunity, rather than take a trade feeling that the downside is the bias. But it's a matter of preference.
But the next day, sorry, go ahead.
Yeah, no, go ahead. What, the next day?
I was going to say the next day creates that gap. So then it becomes, a gap that eventually at some point we're going to close. Would you kind of change your bias after that?
No, because my bias is okay. So this big move down, take a position here. We don't make a higher high. I don't take another position here to go up. What I do is I wait for some other indication. The rise, we consolidate, we drop, we consolidate, close this gap, we drop. And right here, I don't have a clear place where I can draw a supply zone. You might say this could be a supply zone. And then when we come back here, we go down. So when you have that bias to the downside, when you get to a place where you're starting to make lower highs, right? Lower highs, lower highs, lower lows, Then you say, okay, I'm gonna close this gap, so I'm gonna take this trade. Lower high, right? From here to here, from here to here, from here to here. Say, okay, I'm gonna take a trade from here to close the gap. And so November 25th until December 15th, about 3 weeks to close that gap. But so keep in mind your bias always. Like which side is my bias, and pull your trigger based on that bias. If the charts look good to you, but you have a bias to the other side, like I would personally, I don't take that trade, or I take it with a very very little position, right? Like not even a quarter of my normal position size. I might just say everything else looks good, but it goes against my bias. Let me take a small position, and if I get a nice gap, I'm just going to exit quickly. Because that, like we saw today, you have this nice jump up, right? The way it opened, this is a gap. From this close to this open was a gap. And it kept pushing up. So we go to a lower time frame. You can see it. This was gap up, price kept pushing up, and then it immediately collapsed. So when you're biased to the downside, you take advantage of this gap. If I were to trade today, right, this is so you normally draw it to the bottom of the wick, but if at 6:30 when it opens as a gap, I draw it to that open. If I'm trading at 6:30 in the morning, if I'm looking at that chart, this is where I draw it. If I'm looking at it an hour later, this is where I draw it. Either way, I know there's a gap to be closed. So here, when the very next hour, two things happen. We got a big wick that says bears came back in charge. This bar almost straight down from the open. We go below the open and it just keeps going down. Just keeps going down. That's a nice trade here. Just to close this gap. You don't even have to look at fibs or anything. You can just say, hey, I'm still biased to the downside overall market. I can just take this trade. But this gap was closed quickly. So I showed you the lower time frame because you don't see this gap. I mean, trained eye, you can see it, right? I know it's a gap because it opened here. So when you see that, bias to the downside. Now, overall, the market is sideways. Right now, the last 2 weeks is just sideways market. There's not a whole lot to trade, but I mean, if you're looking at big moves, but if you're doing quick in and out trades, you look at these opportunities. Is there a gap that needs to be closed, or is there uh, a supply zone or something that just got hit? We close that and we're coming back down. Hopefully, the supply zone demand zone made a little bit more sense today.
Yeah.
Okay.
I was gonna say, even in that gap, it works out very nicely in terms of like the our kind of plan to say once it closes the gap, it acts as resistance, because that's exactly what it did in that first hour. Because there was the gap from right there from the 22nd. It looks like
This gap.
yeah,
Right?
and then as soon as it closed the gap, it just collapsed.
It's just collapsed, right? That's why when you look at any chart without having any drawing, when you see a rejection, ask yourself, why is there a rejection at this specific point? And all you got to do is look left and you see, I see this gap. As soon as they close that gap completely, they decided we're done. Right. So here we have a gap here. So we just watch it. We have this gap here. We watch it. This gap also coincides with a supply zone, so you don't really have to worry about this gap. I think we might have tried to close it here, but it didn't happen here, it didn't happen. So we have the supply zone. So as soon as price comes up here, I'm cautious. I'm really cautious because it could do this, right? It could do this. I'm biased to the downside. Now, what would be nice is if it touches this and then it does this. Then we know we're back up to the upside, at least momentarily, until we hit the next supply zone. Once you identify them, right? Every day you identify one, you draw it. You identify one, you draw it. Every time you do that, then you don't have to look left on a weekly basis because you've already identified your supply zone. Like this one, it's been already taken care of, so you don't have to worry about it. But here, so we drop, right, and then drop again. But before it dropped, it kind of consolidated in this area, right? So this is again a good supply zone to identify. Because what happens when price comes back there? We want to see. We want to be cautious. We want to just prepare. It's all about preparation. If I'm prepared, what do I do? Yeah.
Is that second one a supply zone because of the small consolidation before the second leg drop?
This one?
No, the second one, the
This
one
one?
below.
Yeah. So it's drop, consolidate, drop some more.
Okay.
Right? So that's one of the three conditions. It's rise, drop, rise, consolidate, drop, or drop, consolidate, drop.
Okay.
Yeah, all those three conditions apply. So in this case is drop, consolidate, then drop some more. So here I'm interested to know because whoever placed this order to push the price down, they're not going to chase. Right? If within this zone they've already sold, the next day they're in profit, they're not adding to that position. When there's this gap, they're not adding to that position. When we come back up here is when they want to add to that position. An aggressive institution might add to that position up here. They might add to that position here because they'll say we're close enough to that supply zone. I'm not chasing out, I want to add to my position. Again, they're adding, they're not entering a new position. That's why it's called a supply zone. Is they took a position here. Not all their orders were filled. If they wanted to spend $10 million, maybe 2 million got filled here because they're not chasing. Always remember that. We chase, they don't chase. They set the pace, right? They're not chasing. So that's why we want to follow what they do is when they come back up here, if they have more orders to be filled, if you get like an inverted hammer in this area, it's a good chance, if you're biased to the downside, it's a good chance that they're going to make a new lower low. Right? It's not guaranteed, but it's a good chance.
On that area right there that you circled, is the reason why you didn't draw that as a supply zone because it's already closed?
There's no, you mean because of this guy?
Yeah.
No, I didn't draw it because I felt that it was too close to this one.
Yeah.
So you would not be wrong. Honestly, you would not be wrong if you had drawn this.
Yeah.
And you would have seen today, again, more indication, right? It was not just only this gap, but this supply zone also is filled, and they rejected it. So you would not be wrong to think that. I think that's a pretty good observation. Yeah. Now here is a good one to kind of keep an eye on, because if they rejected it there, if they rejected this one once, could they reject it again? Here, remember I said if it touches one time, I delete that drawing, but
Yeah.
this is almost like not deleting it because I'm still biased to the downside. It's not like we've come from here all the way down and then all the way up here and done. This is a small movement to the downside, so it's still possible there's more orders to be filled. Again, if it collaborates with other indications, like I get my candlestick pattern or the chart pattern, or it aligns with some fibs, I'll take that trade.
Makes sense.
Yeah. Okay. Any questions?
No, not for me.
No.
Okay. So I think for next week, it would be good if you guys really do some homework around this. Right?
Yeah.
More than the gaps, this supply zone and demand zone would be important to identify.
How far back should we go by when you draw the? I guess it really only matters in the current relative. Actually, maybe I should just ask, how far back should we draw supply and demand zones if they're open?
So how far back you should draw is like, take a look at this guy here. So I have a demand zone down here. Price is not near it yet, right? So I should definitely go at least this far back. But then if you look at this guy, you say, oh, at least I should go this far. At least I should go this far. It all depends on how far down you anticipate the markets to go. Right? I anticipate the market to go somewhere near here. So you should at least go back this far.
Okay.
Right? That's how far you should go. Now, if you say I don't know how far the markets will go, then go back 2-3 years. And then if it never gets there, that's fine, right? But at least you've done the exercise.
Yeah.
Like this one, if you look at this one, if you had drawn this at the right time, what happens? When we came back there, price reversed. Yes, it went outside of it for a little bit, but this is where the demand zone was really strong. And actually, I believe this is what happened. I believe there was some manipulation. When price comes down here, people anticipated and took a position, and the very next day, they wanted to take out their stops. So what happened was, people who, when this bar formed, it touched it and went up. People say, I'm gonna get in at 275. I'm gonna put my stop a little bit below here around the 220 area. So the very next day it opened low, it tricked them again and went down. And then the following day it cleared all the stops and reversed. That's one piece of the manipulation. Manipulation will happen on both sides. This bar would say, oh, we're closed outside of this demand zone. I'm going to enter short. Very next day, they make that person happy because it opened here and it kept going lower. But then that same day, they came back and cleaned out their stop because their stop is probably above this bar. So they cleaned out. So they manipulated the position on both directions, to the downside, to the upside, they cleaned house, and then they went up. Third thing is, if you recall last time I talked about order block. An order block is an area where they take the price in one direction when they want to take it to the other side. So they took it down to take it up. So they took it down for one day and then part of the following day, and then they took it up. So this is your order block. Excuse me. So this is where you know a lot of the manipulations are taking place. And now you can say then this order block area from this, because it's this one bar has a wick to it, you can just use this. I'm actually on a weekly. So you have this order block. So could we come back all the way down here? Because this is the last time where they manipulated price, right? It's possible. So you keep all of these. You can draw this as a demand zone. Don't worry about calling it an order block. So, but it's that same concept, this area. So keep in mind, manipulation happens. They will trick you. Price is going to the one side. They take your stops, and as they're taking the stops, they want people to take that opposite side because they also want to take their stops. So they pump two sides of the trade out, and then people go crazy thinking, I had the right side, but I got out prematurely. So what do? They widen their stops the next time, and then institutions, they can see these stops and they'll say, oh, okay, I'll just go wider. I'll clean you out even wider. So instead of trying to outsmart them, just let them finish their manipulation and then you enter the trade. That's just how you play it. Like when, when they made this COVID low, you have low, high, higher, low, boom, you have your entry there. All the manipulation is finished. It's taken care of. Both sides are taken care of. So you don't have to worry about entering down here. It's great if we can pick the bottom and the top. But we have no way of knowing. I prefer to get the middle 70 to 80% of the move and be happy rather than risk it down here all the time. Yeah.
Yeah.
So you got a good homework, I think, for now.
Yeah.
Yeah. I'm eager to see what you bring next week.
Yeah, me too. This is a nice refresher. Really solidified a lot of the concepts.
Good. Do not pick any symbols we've looked at, right? Just use brand new tickers. Brand new tickers, because that's how you keep practicing.
Mm.
Yeah.
Okay.
Okay?
Okay.
Sounds good.